Are you going to Mars? Huh? Are you going to go on one of these flights that keep blowing up? Elon? Elon? Welcome everybody to Markonomics presents Hoot Loot, the show where you go to the destination place to be informed, be amused, but never be misled. And what you just saw was another one of my conversations with Elon Musk, and hopefully today he's not talking to me again. And I look forward to an uninterrupted session with y'all, and we're going to learn an awful lot today. Today's show is called For Whom the Bell Tolls. And what you see behind me, right back there, is a big old hourglass because time is ticking away and the market's days are numbered. So with that, I'd love for you to like and subscribe right above me there. I love you subscribers, and please tune in. You're going to love today's program. It's packed full of information and learning information, and we will see you in just a moment with the charts. All right, well, let's go to the charts, and of course we're going to start with the Dow Jones Industrial Average, the king of all averages, although not a very good average if you ask me, but we'll talk about that another time. What you see here on the Dow is a constriction of the movement. It is coming to a peak of some sort and a decision point, and right now it's do or die time. I think that's why the hourglass is running out, time is running out, and pretty soon you're not going to be able to take your money off the table because it will have taken it off of you. All right, the market doesn't stay this overvalued very long. It needs an awful lot of buy pressure. It's like holding a beach ball underwater. That's how I've described it in the past, and that's how I'll continue to describe it. You cannot force it to an unnatural place without increasing levels of force. Okay, so with that, we're going to go on to the next one here, and that is, of course, the NASDAQ. Now, the NASDAQ is still 6 or 7% below its all-time highs, while the Dow just made new highs. The NASDAQ actually slightly has cracked that little triangle at the very end, but it more looks like now if I flatten it out, I could actually draw a flattened curve on it. Does it, it's really teetering on the edge of actually going positive. The reason I don't think it will is because interest rates continue to climb. So we're going to get to that too. The S&P 500 looks like it's kind of in a rounded top, but it also could be in a double top. The dotted line up there shows a double top, a rounded top. Either way, it is becoming outrageously expensive, and this is happening against rising interest rates that are skyrocketing and therefore diminishing the value. It's only a matter of time. And to give you an idea, most indices have gone up by 100% in the last 12 months. Most, almost all the major ones. Bonds, on the other hand, have gone down about 20% themselves. And interest rates have gone up, they've tripled in the last 6 months. So if you look at it on a relative basis of value from asset class to asset class, that is a 2 times from stocks going up, and instead of bonds going down by 50%, they've gone up by like 200%. All in all, you've seen a 6 times relative value shift. That's a 2 times gain in stocks versus the 3 times gain in bond yields. Stocks and bond yields do not tend to move in the same direction for very long because they're competing assets, and when one returns more than the other significantly relative to the risk, people switch from one to the other. So the S&P 600 small cap index has been very strong, but look at that, rounded top. Remember hearing me say rounded top enough times on Wednesday? Well, here's one that is again in a rounded top, and we're seeing it all over the place. The dollar, on the other hand, is in a rounded bottom, and because of that, it's counterintuitive. Everyone was bearish the dollar. So was I, as a matter of fact. It seemed obvious that too many dollars out there were going to force the dollar down. Well, that's the problem with too many people believing the same thing, because it never accommodates the crowd. It accommodates the minority. It accommodates the people who are have enough courage to go against the crowd, don't need validation from the crowd, are willing to buy low, sell high, despite what others are doing. That's how you make money in the market. And the US dollar is in a pattern that says, I'm going up. And if it comes to fundamentals, like too many dollars out there being sprayed around in stimulus after stimulus, well, that's fundamental. I'll listen to it. I'll keep it in mind. But the chart says otherwise, so I believe the chart wins. And the dollar, at least temporarily, is going up. And Bitcoin, sort of the anti-dollar. And who doesn't love Bitcoin these days? Paris Hilton, of all people, is an expert in crypto. Believe it or not. And everyone I know is an expert in crypto. Except me, I don't know anything about it. So Bitcoin, we've speculated that too many people are in it, too many people own it, too many people are bullish about it. It seems like it is a guaranteed gain. That right there ought to tell you it's a guaranteed loss, because every time I felt that way, it's been a guaranteed loss. And I am not 100% sure it could go higher, because it's irrational, it's crazy, and all that kind of stuff. And to tell you the truth, we're going to have some interesting information on cryptocurrencies coming up, which you will have never heard before. Okay, not even on this show. This is new research done to actually assess what it's all about. It's actually a little different than I said before, but I'm not going to let the cat out of the bag quite yet. Gold is behaving terribly. Why? Because the dollar is behaving well. And look at me, I've been pounding the table for gold for God knows how long, and silver and precious metals and all that, and commodities. And this one, going nowhere. But if you look at the very end, it may have made a double bottom. It's kind of held up reasonably well, but it sure has dropped for a long period of time. And it's certainly high time. It certainly has built up enough non-interest to where the crowd can rush into it and then drive it up. That's what happens. No one cares. The crowd comes in slowly. Things start to rise a little bit. Then it starts to accelerate as people watch the movement and they don't want to miss out. Fear of missing out is one of the biggest problems out there, is that you absolutely have to get into everything that's going up, whether you know a thing about it or not. It's just an asset that needs to go up. So, chasing stocks is not a good idea, or chasing Bitcoin or gold or anything is not a good idea. But in any event, gold looks like it might be basing here, but I am nowhere near recommending anything long. Long means you bought it and you own it. That's what long means. Bull market means going up, bear market going down. So you know some of the terminology. Long means you bought it. Short means you have sold it without actually having bought it. Those are key terms that are used. And I know that you may not speak the lingo, so I'm going to give you some translation here. Also, we have silver. Silver's in a trading range. And that's actually where we find an awful lot of companies or commodities or anything these days. You're going to see as many sideways flags as you're going to see rounded tops. And that tells me that very few things are in rounded bottoms, very few things are in bullish patterns or at the tail end of it. And that's not a good time to get in. That is not buying low and selling high. That is buying high and waiting for that greater fool like me to show up. Because, as I've said before, a fool and his money are soon parted. Which reminds me, where the hell's my wallet? Well, never mind. I'll find it somewhere. Hey, did you take my wallet? He doesn't like the quality of his dog food for some reason. I don't know why. But anyway, so this is a Commodity Research Bureau index of commodities. No inflation here that you can see. It's just doubled in the last year. And I've asked Jay Powell about it. And what Jay says, now he doesn't want to come on the air anymore. He's a little leery of me and the questions I ask. But What Jay doesn't kind of understand is that people spend more money on things like housing, cars, phones, food, and stuff like that. And the CPI has been so butchered that I think the only thing it covers are computers, which go down in price, and maybe peanut butter sandwiches. Obviously, I'm kidding just a little bit, but they have a CPI that's what they call core, which is everything. Or no, core is everything excluding food, energy, food and energy, and lodging apparently, as if no one needed those things. I guess Jay doesn't because he gets free lodging, free transportation, and pretty much I'm sure they feed him too. He probably has an expense account, so how would he know there's inflation? Let's see, crude oil. There's one of your reasons right there. Crude oil is an input in just about everything, including, I hate to say it, but Ace's dog food. But everything has petrochemicals in it. I'll bet you even those Beyond Burgers that you think are so natural, I'll bet you there are petrochemicals in there. I haven't even looked at them. I can't even pronounce most of the multi-syllabic names of all the chemicals in there. It's like 27 chemicals in there mixed together. It's supposed to be a healthy taste like meat, except it's plant food. I don't know. Not so healthy and not so proprietary because a lot of companies can do this, replicate it very easily. But anyway, crude oil, input to everything. Also in a rounded top, by the way, which doesn't mean that's a termination of the rise in prices. It just means it's a temporary termination, and it hasn't technically broken down yet. So it may be one of those false patterns, or I may have drawn the pattern too preliminarily. Sometimes as you get new information, you have to redraw, and that's key. What's key in this business, what's key to a trader, is to stay objective, keep your ego in check at the door. I always do, because I am so wonderful and so gorgeous, and if I was a woman, it'd be all over me. So I keep my ego right at the door for that reason, and I can make trades without any even hint of emotion. Oh, did that stock go down? Oh, God. Okay, anyway, so copper miners. Copper miners, once again, copper's going up in price, and that's copper's everywhere. You know, the mob even steals copper pipes from abandoned homes. Believe it or not, when they're abandoned, the mob goes in there and steals the copper pipes because they're actually worth something. The Invesco Agricultural Fund, I know nobody eats out there, and I certainly don't. But food prices are generally going up, and you'll know that because your Big Macs are going up, your fries are going up, Ace's dog food is going up, and my viewership, it's going up. So there's inflation there too, and I got to thank you guys for that. All right, so we're going to go on to 5-year Treasury yields. The 5-year bond is about to approach 1%. Now, it was at 20 basis points not all that long ago. That would represent a 5 times increase in about 6 months, 8 months, something like that. And you would have lost some money. Here's what you get if you'd held an ETF of the 3 to 7 year Treasury, you know, sort of mixed to average about 5 years roughly, and you'd lose some decent money for a supposedly riskless investment. After all, the U.S. is a AAA credit. It can print like nobody's business, and this is supposed to be risk-free. Every pension fund owns this, and this is used for cash management. Oops, sorry, not so safe after all. 10 years, going crazy. The 10-year, actually in aftermarkets trading on Friday, Good Friday, is actually open partly to the futures markets. It's not open here to the stock market, but the bond markets are open, the overseas markets are open, everything is open, but of course, bankers take the day off. You know, when you're a banker, you get to take the day off. So yields on 10-year treasuries are still headed up, and they still can head up a lot more. Right now, even the Fed has said our target inflation is a little over 2%, and until we see 2% and, you know, the roaring embers of inflation in our face, we're not going to do anything. Well, there's a lag when it comes to monetary policy. It doesn't, the economy does not respond right away. So by the time they see inflation, the fire's already out of control, and they can't really do much about it at that point. So if they're going to let this thing keep going without actually trying to somewhat gently keep it from overheating, it's going to overheat. In fact, it already is. 7 to 10 year treasuries. This is the ETF. You would have just had a cascading loss in this thing in almost no time. Even in the last, even just at the beginning of the year, it's down substantially. You just put your money in a 10-year bond in January, and in 1 quarter, you'd have lost nearly 10%. Okay, but you would have gotten your 0.5% coupon, so you could be really, really happy. Oh, actually, not even a 0.5% coupon. You get a quarter of 1%. So you get a 25 basis points coupon. Okay, yay, good. Safe, 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 safe. All right, so 20-year treasury, same thing. And this one, still, it's at 2.4%. It came back in a little bit on Friday on the news. It came in on, actually, Thursday it rallied on the news. I don't even know on what news, to be honest, because it went, yields went down, and they're historically really low, and the commodity, the CRB, which you just saw, I don't believe I have ever seen it double in 12 months. So this might be the most inflationary pressure we've ever seen compressed in the shortest period of time, and the Fed is acting like, we're just going to let it happen because there's no consequence to it. The bell tolls for you guys too, okay? This is a great hedge right here. If you are somewhat exposed to rates going up, this is a security you can own that will actually offset higher rates. Okay, so as rates go up, bond capital value goes down. Okay, remember, rates up, bonds down in capital, and this is an inverse ETF. So in other words, it goes, instead of going down when interest rates go up, it goes up when interest rates go up. So, because it's inverse, it acts the opposite. And it's a terrific hedge, and it will likely appreciate a lot over the coming year or so, or maybe even more. Typically, commodity type cycles last for a decade or more. So, we're just getting going. We're just getting that motor running. 30-year treasury yields right here. Again, these are the longest duration of bonds. But look how much you would have, well, actually, what you would have lost is approximately the 20. I guess I must have put in front. But in any event, it's still low. I would say that it certainly is not out. First of all, the rate of inflation should be at least the yield on the bond to not lose money over the period of time. They laughing bond traders call bonds certificates of confiscation. Why? Because inflation allows for confiscation of wealth in the most secretive manner. You don't really see your money disappearing. It just kind of shrinks and shrinks and shrinks and shrinks, kind of like you put cotton in the wash in hot water and then dried it in hot. And that's pretty much what happens to the buck. It just shrinks and you never know it. It's a certificate, a bond, it's a certificate of confiscation if it doesn't at least provide you with a positive return, and none of the U.S. bonds do, not one. And as a matter of fact, they don't do it anywhere. So we're going to have some interesting times coming up. Okay, oops, I went too far ahead. Well, actually, I meant to start with Apple anyway. Apple was the first stock, the mega caps that we said, this thing is kind of getting a little soft here around the edges. All of a sudden, it started to rally. On Wednesday's show, kind of looked at it and went, things look a little more positive. Well, on Thursday, even though the Nasdaq had a big day, a surprisingly big day, stocks like Apple closed down on the day. We're up 3 points and closed down on the day. That's a significant one-day turnaround, and it tells me that they just burst up on short covering, and then they sag thereafter. Microsoft again in a rounded top pattern, and it's very vulnerable to higher rates. Netflix neutral, sideways. Again, A lot of companies going sideways, making people go complacent, but of course the market will rally. Nvidia kind of broke down a little bit, snapped back a little bit. That puts it kind of in no man's land. Don't touch it. Don't touch it for now. Just kind of let it go for a while. If you're interested in Nvidia or chip companies or anything for that matter, do not fight the market. Do not fight the tape. If it's going down, don't buy something that's going up unless it's an inverse type of security. All right, Qualcomm, another chip maker. This one broke down. This one kind of snapped back a little bit, but it looks like this one's kaput, as they say. Tesla. Why am I adding this? Not just because of Elon, but Tesla is, I've referred to it as a canary in the coal mine. If you look at it, and I was watching it very carefully on Friday, it was up at some Thursday. Thursday, I forget Friday was Good Friday. On Thursday, Tesla was up 20 points at one point and closed down on the day. And Tesla was the company that led the rest of the NASDAQ and everything else up because it is a good reflection of the sentiment of the latest buyers to come to the table, also known as dumb money. And I'm sorry if you're dumb money. I don't mean to insult you. I've been dumb money plenty of times. And I can tell you, I've been the greater fool plenty of times, and there's never a greater fool to be found when you need one. Caterpillar Tractor is here because it benefits from the infrastructure bill that President Biden has proposed or has been passed. And even though it's an infrastructure bill, actually, a lot of it, 10% of the infrastructure spending, which is 10% of the gross amount of the bill, only about 200 million or 300 million. It's not that much for roads and bridges and all that. Well, apparently 10% of that is to destroy roads and bridges and stuff like that are racist. I don't know. I've never seen a racist road before, but I've seen lots of weird things, so I remain open-minded. Dow Holdings is a chemical company. It used to be called Dow Chemical, also an infrastructure play. And look at that beautiful trend channel. This thing is a picture-perfect trend channel. Not too fast, not too slow. Airline Index, now and around the top. I've been laughing at this like crazy, like you wouldn't believe. And I'm going to show you in a minute. American Airlines have another laugh at its expense. But also, I want to tell you that Frontier Airlines went public on Wednesday or Thursday under the symbol ULCC, Ultra Low Cost Carrier. Is that the third time that it's gone private, public, bankrupt, public, private, public, restructured, public, private, public? So it came out at a gross valuation, get this, $5 billion. And that's for a company that lost $250 million in 1 year alone and had $1.2 billion in revenues. Can you imagine an airline trading at 4 times revenues? Oh my God. Anyway, that shows you the insanity of the market, the maniacal manner of the market, and there's no fundamental reason. Yeah, there's some people more flying than used to fly, but it will never be the same. Why? Zoom is one reason right there. A lot of the most profitable travel is business travel. It's going to go down no matter what. I don't want to get on a plane. I don't want to have my body cavity searched by the TSA, and I think a lot of people don't like that. And then the whole mask thing and everything, to that. So, unfortunately, airlines are not going to be ever attain the kind of profitability they attained in the past, and that's just too bad. FedEx. Well, this one is in a rounded top, but it's kind of in a jaggedy rounded top. I don't know what to make of this one, to be honest. I am still going to say that this is either a head and shoulders or rounded top, but we'll see. Again, there's no reason to be in it or out of it because it hasn't given you a clear sense of direction. UPS broke out, it looks like, to the upside, but it hasn't broken the new highs. And really what you want here is for UPS to make brand new highs on high volume, and you know at that point there's conviction behind it. There's no conviction behind this or anything else out there except Bitcoin, because we all know Bitcoin is of infinite value. Stellantis, see, here's one of the things about Charter. Okay, Stellantis I originally drew, and you see that here in red, around the top. Never broke down, so you would have never acted on it, but it went higher, and it may just be making a bigger rounded top than it was originally making. Sometimes you see a pattern within a pattern, and those become judgment calls. I wish I could actually put them in a formula for you, so you didn't have to actually think about it, but you do. You have to make some judgment calls based on experience, and I'm trying to, I'm trying to give you the fast track um, from my experience. So, because it's really hard to get experience in the business without getting killed. Home Depot should be called Home Depot. It would be worth more as a dispensary. But it also, this one just whipped the hell out of people. It broke down out of a horizontal pattern, and all of a sudden it's at new highs. So this one's broken out. This is one of the few signs that the market may be heading higher. It also may be a sign that people are doing more do it yourself, do it at home, do it on the cheap, rather than hiring somebody to do it. And I just don't know. I won't know for a little while. We'll see, but it's very rare to see one retailer like this behaving this way and all the rest behaving the exact opposite. Discover Financial Services is a credit card company, and it's in a parabolic uptrend. God knows why. But it's a good sign for the economy because either people have to buy goods, pay for goods, transport goods, buy goods on credit, for example. But however you purchase goods at retail outlets, whether it's online or not, usually many people use a credit card. So that's why. And I think that all the stimulus out there, somehow people have come to the conclusion that it's going to actually go into the economy. Now, a little bit of it will, but a lot of it is going in the market. That's why it's so super overheated. And probably Bitcoin has swallowed up a third of the stimulus checks anyway. And just wait till that stimulus goes poof. Yeah, I'm a magician too. All right, MasterCard. It's actually gone up. And that too, out of a horizontal flag pattern. But if you look at it, and I didn't draw it in, what do you see there all the way on the right? If you see a rounded top, you're starting to catch on because it's defining what you see and then confirming what you see that makes all the difference. So this one, I could have drawn a rounded top on there, and hopefully you know what it would have looked like, what it would have, but you still have a sell signal, not so much at the rounded top breaking, but at the the red line that is a horizontal. I normally use red as a place where something goes through, it turns bearish, and green to indicate it's turning bullish. So we do have a color code here because we're all color coordinated. Visa. And we're not talking about a vaccine visa or a vaccine passport. We're talking about the credit card company. And it broke down on big volume. It's kind of consolidating a little bit before the next move. I'm guessing it's going to be down. I'm guessing it's going to be down. I'm guessing. And that's, again, experience and an opinion. And we just wait for it to be confirmed. Nordstrom's did break out of around the top. I didn't draw in, but if you actually look at it, you see a bigger rounded top where it peaked. And notice it came all the way down to the red line, the horizontal red line. Well, it shouldn't have done that. If it was really going to continue up, it would have continued up, but it didn't. It basically went all the way back to the support line, and it made what looks like a lower high from its high. That means head and shoulders. That means rounded top. That means when it breaks that line, that means sell. Goldman Sachs, you can never say sell about, but even Goldman Sachs is just at the line, its uptrend line, and this thing has got to give it up sometime. They've gotten themselves into the cryptocurrency trading business, which they kind of went this to the first time around, kind of held their nose. Now it's not beneath them anymore for some reason. Wonder why? Could it be possibly that they expect to make some money out of this? Nah. I'm sorry about that. I'm so suspicious sometimes. JP Morgan, yeah, you could draw another rounded top up there too. I didn't. But most of the banks are looking like this, and we'll see the bank index look like this in a minute. As a matter of fact, in a second, because here's the banking index right there. Rounded top, all the banks are making the same pattern. Not good, not good, not good. Not necessarily horrible, but just not good. These are the regional banks. These are the ones that don't have national franchises like, say, J.P. Morgan or Wells Fargo. This might be like a bank of, a Bank of Boise or something like that. Actually, some of them are smaller than that. But these are the banks that don't have trillions of capital, and they don't have the Fed's attention. The Fed will let them go. The Fed will never let J.P. Morgan, Wells Fargo, Bank of America, or any other bank of its size, Citicorp. They'll never let one of those banks go. End of story. They will bail out those banks. They will not bail out regional banks. Period. Okay? Regional banks do not contribute enough to political campaigns, so they don't get bailed out. I don't know that for sure, by the way. That was just speculation on my part. So if I misspoke, forgive me. Broker-dealer index, again, rounded top, and Goldman dominates this. And look what we see, possibly rounded top, possibly at the trend line. And again, we have a whole slew of big... When you can get a $5 billion for Frontier Airlines, and you earn something like 6% or 8% of that amount, that's not a bad payday. And that's what I think Goldman keeps rallying on, is these constant IPOs, which are worth more and more and more and more, and are all hypothetical and can't be proven to be worth nothing because they're so cloudy and confusing, especially one like SpaceX. My good friend, and I don't even want to talk about that anymore. At one point we'll discuss it in more detail. But Elon's already taking, I understand, I've read that they're already taking deposits on that wonderful trip to Mars, your dream honeymoon that you're going to take. The problem is you have no way of coming back home, assuming that you got there in the first place. Assuming you didn't explode on the launching pad. Real estate has been kind of a question mark the whole way. It seems like right now it's actually starting to move up, and that's good. What we've read a lot about is real estate is in a bubble, supposedly. It may or may not be, but the thing is, it appreciates. There is never going to be more land, okay? But there are always going to be more dollars. So of course it's going to go up in terms of dollars over time. It has to. You know more dollars are going to be created, and you don't know more land is going to be created. So it's that easy. Healthcare? Healthcare is free. No one pays a thing for healthcare. So of course it shows up in the CPI as a 0 because it's all free, like education. Free. No one gets paid. There are no professors who insist on getting paid. Books are free. The cost of making a book is free. The paper that goes into a book is free. The dorms are free. The lodging is free. The food is free. And the education is worthless when people are taught that things are free. And home builders, here's another one. Home builders are going up for the simple reason that the price of building a home is going up. They're not going up because there's big demand for home builders. There would be a population boom, and there isn't. As a matter of fact, I expect when the population statistics really come out, we'll see that after the flu hit, that one, that people had fewer kids, the divorce rate's gone up, the suicide rate's gone up, the poverty rate's gone up, all reasons not to be producing children in this day and age. And I just don't know how bad it's going to be, but you cannot have a GDP growing and a working population shrinking. I mean, the two are impossible. You have to have people working more labor hours plus productivity gains. That's GDP gain for you. It's two equation formula, or two factor formula. Another reason why China isn't growing as fast as they claim, because they have the one child per family policy and their population is going down. Their economy is so inefficient, you can't possibly imagine that they're having 8% productivity gains a year. That is just not possible in a command and control economy. It's possible in a free market because it occurred here for like 100 years. Our first 100 years, when we had a free market, things grew like crazy. It's after we started to kind of, handcuff the giant before things start growing. Retail making a new high. I don't know why. Probably the stimulus checks, but here we go. Here's another reason to be cautious about the sands of the hourglass running out. They are running out. We just don't know exactly when, but it's pretty soon. Semiconductor Index, these things never go down because they never go down. And it's not that tough to add capacity to plants, from what I understand. And still there's this talk of a chip shortage, and it's cost the automobile industry $60 billion, et cetera, et cetera, et cetera. Now, if it really cost the auto industry $60 billion, would we have seen Ford and General Motors and Tesla in parabolic uptrends? Hardly. And actually, that's the last chart. So we're going to be back on Wednesday, and we have a great show coming up for you. So thanks everybody for tuning in. The next show will be next Wednesday, April 7th, another classroom edition of Hoot University. You will learn all the secrets you need to know to keep from being the person for whom the bell tolls. Oh my God. Oh God. Okay, my ears are ringing, but anyway, thought I would make it through a whole show. Oh, well, actually, this is a good one. Hi, Dr. Fauci. How are you? Thanks for calling back. Yeah, it's about my wife, the First Lady. What? You know her? Since when? You were engaged to her before Elon was? Oh, jeez. Okay, well, in any event, she's had a little side effect from the vaccine that you ought to know about. Actually, honey, can you come here for a second, please? Okay, so in any event, she's here, and she's just completely in fear from all the multiple masks. She's wearing a Jason hockey mask. She's wearing 2 masks underneath that mask, and basically, she's lifeless. Now, what could all I want to know is, you told her to take the vaccine, right? Ugh. Okay, let me ask you a question. Have you taken the vaccine? Dr. Fauci? Dr. Fauci? Dr. Fauci?